All right, hello everyone, and welcome to the NinjaTrader Ecosystem Webinar Room. Before we do get started with our presentation today, I want to take a moment to test for picture and sound. If you can hear my voice and see the projection in the room, please type in the city you're joining us from today. All right, I'm getting some confirmations, and I'll highlight some of these here shortly. My name is Jared Meyer, and I work on at the NinjaTrader Business Development team here in our Denver office. We do have a very special event for you today with Michale Valtos of Orderflows.com. And I just want to ask everyone a quick question. So if you could do me a favor and choose number 1, 2, 3, or 4 on the poll screen that just popped up for you. Let us know what type of NinjaTrader users we have in the room today. And while you fill that out, I do want to mention it is important to understand that there are substantial risks in trading commodity futures contracts as well as Forex. You should carefully consider whether such trading is suitable for you, and that will depend on your specific circumstances and your financial resources. It is possible to lose all the funds deposited with your broker, could even incur losses beyond these amounts. Please inquire at the link I'm going to pop in the room here, which is NinjaTrader.com, NinjaTraderEcosystem.com/disclosure for more information or for a copy of the CFTC Force Disclosure. Also, please remember that these ecosystem webinars are not a solicitation or recommendation, but simply educational in nature. Also, please note that this presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting NinjaTrader trading software. Any brokerage-related questions should be directed to our NinjaTrader brokerage. I'll pop the information into the room here for that. Our email address is brokerage.sales@ninjatrader.com, and the phone number here is 312-262-1289. All right, I want to thank everyone for filling out the poll, telling us what city we have people here from. I'm just going to pop in here Sydney. We've got some people from North Carolina, Orlando, Utah, Brisbane, Australia. Fantastic to see you here. Copenhagen, Rio de Janeiro. So people from all over the world here. That's a fantastic thing to see. And then I want to go over the poll results. All right, so it looks like about a quarter of the folks here are using a free license key, so great to see you in the room. Over 40% of the people in the room today are using a lifetime license key of NinjaTrader. We're glad to see you here and appreciate you coming to our event. We've got a handful of people leasing a key, and we've got about a quarter of the people that are not yet using NinjaTrader. So I want to let everyone know that NinjaTrader is free for advanced charting, market analytics, automated strategy development, connecting to a live data provider, and simulated trading. We do only charge for our product if and when you decide to trade live through any of our supported brokers. If you have not already done so, I do invite you to download NinjaTrader for free from the following link. Also, you can purchase or lease NinjaTrader at this link here. For those of you that are interested in maybe upgrading your free key or your lease to a lifetime license. So I'm going to stop the poll for everyone and close it out here. Now, we are very excited for this unique event in which Michale Valtos of Orderflows.com demonstrates the immediate benefits of introducing order flow into your trading. Thanks again for your attendance today. And without further ado, it's my pleasure to welcome to the NinjaTrader Ecosystem webinar room, Michale Valtos. Please take it away, Mike.
And for those that are new to this presentation, to myself, my name is Michale Valtos. I'm a former JP Morgan trader. I traded there for 8 years, and I'm going to be explaining how to get an edge over other traders with order flow. And everyone always talks about, every book that you read is about to be a successful trader, you have to have an edge in the markets, and they don't really explain how to, really how to get an edge. And I'm going to hopefully explain to you how you can add order flow to your trading and hopefully come away with an edge. So before I begin, a brief disclaimer that this presentation is for educational and informational purposes only, should not be viewed as a solicitation or recommendation of any product, service, or trading strategy. I'm not telling you to go buy this or sell that. I'm not trying to give you trading advice. What I'm here to do is impart my knowledge that I've gained over the 25 years that I've been involved in the futures market. And for people that don't want to sit through a disclaimer, and understand the risks involved, they should really consider if trading is for them. So today you are in for a treat because I'm going to show you the easiest way to understand what's happening in the market so you can make better trading decisions tomorrow if you add order flow to your existing method of trading. I'm not saying, oh, you should drop the way you're trading and pick up order flow. No, order flow is something that if you add it to your, I find a lot of traders add order flow to their existing way of trading, really just sort of puts them over, over the finish line. Puts them into the end zone that, they really start to understand what's happening in the markets. So my goal for you today is to explain why order flow matters. And we'll try and make order flow a little bit easy for you. If you're new to order flow, I want you to forget about that 10,000 rule nonsense that you read about, on these message boards. People say, well, to be successful, you have to sit in front of a screen for 10,000 hours. I just find that nonsense. I'm going to explain how to easily spot price rejection and use it to your advantage. How to use order flow to find market-generated support and resistance levels. I mean, market-generated information is the best information that you can have, and I'm going to explain that in a bit. And I'm going to show you a trade setup that risks as little as 3 ticks per trade. Everyone always says you've got to have, manage your risk, manage your risks. And, if you could have a trade setup that has very small risk, then, that's a good thing. So I'm going to do that without tons of screen time. I'm going to show you how to learn order flow without tons of screen time, without mathematical manipulations of price, which is what a lot of indicators do, and without messy charts. And I'm going to try and teach you how to trade as a trader, right? People are nowadays with computers are very indicator based, and that's not trading. That's being a signal follower. You don't understand what's happening in the markets. The buying and selling that's going on in the markets. So hopefully, by the end of this presentation, you will understand that a lot better. And if you stick around to the end, I'm going to show you how to get this book that I wrote. It's called Trading Order Flow. It's a PDF, so you're not going to get in the mail. You're not going to get an actual book. You can download it. You just got to enter your email in the email box. So let me ask you, if there's one thing we can all agree on about trading that we hate, what is it? It's risk. Right? Nobody likes risk in anything, whether it's trading or whether it's driving your car or crossing the street. You don't like risk, right? You want to cut out your risk as much as possible. And I don't want you to take risks in your trading. Me, I see risks. This is not me. I'm definitely not the hippopotamus or the guy running, but I don't want you to take risks in your trading. You shouldn't have to. And so you have to ask yourself, if you are relatively new to trading, or if you haven't traded with real money, you should ask yourself, is trading for you? And what your goal is in trading, because for some people it is, and for others it's not. I just got to be honest. For some people, trading is not for them. So you have to ask yourself, are you willing to take action? Are you willing to have no regular paycheck? Can you handle rejection? And if you have losing trades, does that affect your psychology? These are questions you should ask yourself before you begin trading. And the next step is to ask, is order flow trading for you? Again, for some of us, yes. For others, no. And why do I say that is because, to understand order flow, there is a learning curve. I'll admit it. It's not something that people can just sit down and pick up right away. You have to put in a little bit of time and effort to learn it. But again, it's not like 10,000 hours. You could really pick it up relatively quick once you understand the basics, which is what I'll hopefully explain in this presentation. And ask yourself, are you a tire kicker? Are you someone that just jumps from indicator to indicator every couple of weeks, sort of looking for a holy grail? If you are, then again, order flow may not be for you because it's a method of trading. It's a way to understand the market. And if you don't want to do that, then unfortunately, I can't I can't twist your arm and say, no, you got to use order flow. I mean, order flow is not for you. And again, do you want to understand what really moves the market? Pressure buying and selling pressures, supply and demand, how that moves the market. All that can be glistened from order flow. Jared, I think I closed our chat. So who am I? And just a brief explanation of who I am and my background. And I don't say why you should listen to me, but just so you understand where I'm coming from. Is I've been in the futures industry for 25 years. I started out on the CME floor. Then When Globex started trading, when the market started going electronic, I left the floor to trade upstairs. This was with Dean Witter. After Dean Witter, I spent a couple of years at EDF Man, and after that I was with Commerzbank for 3 years in Chicago. You know, Commerzbank is the big German bank. And after that I was with Cargill. Cargill is, you know, for people that aren't familiar with Cargill is the largest privately held company in the United States, and it's one of the largest commodity traders in the world, period. You know, people don't think, you know, when people think of trading, they think of, you know, the big Wall Street banks, Goldman Sachs, you know, JP Morgan, et cetera. But, you know, the commodity trading firms actually generate more revenue, you know, the Cargills, the EDF Mans, the, you know, Glencores. If you were to add up their you know, their returns, it's actually more than what the investment banks make. And most recently, before starting up Orderflows, I spent 8 years at JP Morgan as a futures trader, as vice president of futures trading. Excuse me, I got a bit of a cough. You know, in 2013, I left JP Morgan to spend more time with my family. You know, I was in my early 40s, and I just decided I needed to do something else with my life. You know, because if I stay at JP Morgan, coming into the office at 5 in the morning, leaving at 5 p.m. at night, I'm not going to have time with my wife and my children. So I decided to leave and just trade for myself. And I wanted to write a book, so I started writing this book, Trading Order Flow, which is the book you could get. I'll show you how to get it at the end of this presentation. And, you know, I was trading, but I was using a different order flow chart, a volume footprint chart, you know, just a basic one. And I really wasn't satisfied with it in the sense that, you know, I know computers can help you do analysis. So a lot of the analysis that I was doing, you know, mentally in my head or visually, I realized, you know, hey, some of this I could program. You know, I could, because to see price rejection and price support, price resistance, you can see it in the order flow. And I figured if there's a way I could sort of quantify it and have it identified to me, you know, on NinjaTrader, you know, on the screen, that would just make my life a lot easier. And so I sat down, you know, with the programmer, and you know, I told him what I'd like to see, and he came up with this program that we call Orderflows Trader. And again, you know, it's tools that analyze the volume footprint chart to help traders see price rejection, price support, absorption, and other market nuances. And again, it runs on NinjaTrader 7 and NinjaTrader 8. But, okay, so enough about me. This is not about me, it's about you. I want to show you how order flow analysis will help your trading in the least amount of time possible. Because, you know, at the end of the day, the goal for you is to get from point A to point B as quickly as possible without getting lost, without getting confused. So let me be clear again. You know, you have to make trading decisions. That's what trading is about. You know, again, it's not about, you know, oh, there's a green arrow, so it says buy, or you know, the chart turned blue, I gotta buy. No, that's not trading. That's just following signals. And order flow is not a red light, green light trading system. But when you understand order flow, you'll understand the market, and your decisions will become a lot more clearer. So why do most traders fail? Well, you know, honestly, when I worked, you know, in investment banks, this topic never really came up because, you know, the people that I worked with, you know, we never sat around and said, oh, why did so and so fail as a trader? But after I left and I started working with retail traders, you know, a lot of people were coming to me saying, hey, you know, I've been trading, I've been struggling, you know, for the last several years. And, you know, I'd sit down and sort of go over with how they're trading. And, you know, there's three main reasons that would come up majority of the time. And what they are is they don't understand the market, period. I mean, because, you know, they're indicator based. You know, they don't understand what RSI is or what MACD is, but they're taking trading decisions based off of it. So, you know, it doesn't make any sense. Second reason is they just take on too much risk. You know, they don't know areas in the market where there's support or where there's resistance or where there's price rejection. So they don't know where to place their stops, and they end up placing it too far away. And the last one is I think they spend too much time learning and not enough time actually doing it. You know, too much time trying to learn how to trade and not actually trading. So, you know, what I want to talk about, you know, is order flow. And, you know, what order flow makes it easy for you as a trader to do. It makes it easy to find hidden strength and weakness in the market, determine if highs or lows may hold, find areas of price support or price rejection, and many other things that you can't get off a normal bar chart. This is a normal candlestick chart. Okay, and while it looks, it's nice. I used to think candlesticks were the way. Back in the early 1990s when candlesticks were really getting popular, I was a big candlestick follower. I got all the coffee table books by Steve Nissen. But I found, there was just something lacking with candlesticks. In the sense that, when the patterns worked, they worked, but when they didn't, they didn't. It wasn't different than anything else. But this is an order flow volume footprint chart, and I just found, once I sat down in front of a volume footprint chart and someone explained to me the basics, things just really made sense. I could see where price was being rejected, where supportive buying was coming in, where resistance selling was coming in, where traders were being aggressive in the market. And this was just all happening, unfolding before my eyes in real time. And I just found I was able to make better trading decisions. So the second thing I'll talk about is this 10,000 hour rule nonsense. I don't know if use the word nonsense, but there's people that like to say to master anything, you got to spend 10,000 hours. Honestly, if you can't be successful trading in a shorter time period, you probably shouldn't be trading. And it's like that with anything in life. If it's not something you can pick up fairly soon, it's just going to cost you a lot of money. Because what's 10,000 hours? It's 8 hours a day for 5 days a week for 44 weeks out of the year. That's 5.5 years. Okay, so who's got 5.5 years to learn how to trade? Become successful trading. And hopefully after this presentation, you'll learn a little bit more about order flow that can help you in your trading. And on an order flow volume footprint chart, there's 3 things you need to focus on: point of control, delta, and imbalance. I call these 3 the building blocks of order flow. And point of control is the point in the bar that has the most volume. And it's usually highlighted with a rectangle around it. This is on NinjaTrader 8 with the order flows trader. We put, you could shade it so it's visually it just stands out more. Delta, which runs on the bottom, is a difference between net buyers and net sellers, aggressive buyers and aggressive sellers in the book. In the bar. So hopefully you can see where it's appearing, right? It'll be a red number, like here, this 2 against 39, that's an imbalance. 8 against 224, that's a selling imbalance. Then you have buying imbalances, 5 against 56, that's a buying imbalance. And there are 3 building blocks of order flow. Again, point of control, delta, and the imbalances. And when I launched Orderflows Trader software, I added what I called ratios, right? And ratios help you to determine if price levels are being rejected or defended. And there's 2 types of ratios. There's a ratio bounds high, and what that indicates is price is being rejected. There is a ratio bounds low, and that indicates price is being defended. And it shows up in the order flow. Every bar, whether it's an up bar or a down bar, will have a ratio above or below it. Again, this is an indicator that's built into the order flows trader. So then again, what they do is they help you determine if the order flow is your average order flow, if it's the average market facilitating trade, or if you're seeing supportive buying, or you're seeing price being rejected. So if it's a blue number on the order flows trader, it's important to note if it's a black ratio, that's just your normal average, order flow, the market facilitating the trade. And why is it important? Because you should be watching them at highs or lows. If you're thinking of price rejection or price support, what are you going to look for? You're going to look for generally at turns, market turning points, at highs or lows, at swing highs, at swing lows. So you can see here, you have a blue number. This is the high of the day. Market rallied up. You got price rejection up there. Market sold off. Again, market rallied up. You got up to the swing high. Market turned. You got price rejection up here. Market sold off. Again, it's that period. You should be looking at it at highs and lows, swing highs and swing lows. Here you can see a swing high here. You got price rejection. Came down here to an area of price rejection, and the market moved back up. So you went from a swing high to a swing low, back up to newer highs. So when I say, watch for ratios at swing highs or swing lows, it doesn't necessarily mean right on the turning point. You should be watching, how the market is moving. And you can see here, the market is coming down. Market's coming down, 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 and then it starts turning up. And you're seeing ratios in here. you can see price rejection, price support as the market starts moving up. It didn't appear right on the low, but it doesn't always appear right on the low. What you're looking for is the signs. Is the market turning? Anytime you're at a high or a low, you should be asking, is this high going to hold? Or is this low going to hold? Or are we going to go lower? Or are we going to go higher? And if you're seeing signs in the order flow, then it's going to make your decision on which direction the market is going to go. It's going to make that decision a lot easier. And I used to calculate these ratios in my head and a calculator on the past. But again, one of the reasons why I created the Orderflows Trader software is to let the computer do the heavy lifting, do the calculations for me. So I could look at more nuances in the order flow. And the trading around order flows ratios give you low-risk trading opportunities. So the third thing I'll talk about is how to spot price rejection and use it to your advantage. And more importantly, how to spot it easily. And again, that's where the ratios come in. People always wonder, what's the ratio? What's the ratio? Well, it's the analysis of the order flow in the bar, and it gives you a number, okay? And again, if it's a blue number, and it appears below a green bar, a bullish number will only appear below, whereas a bearish number will always appear above. And if it's an up bar, if it's a green candle, it will always appear below. And if it's blue and it's below the bar, that's a bullish ratio. If it's red, if it's a red candle, a candle that closes lower than it opens, the ratio will always appear above it. But if it's a ratio that you should be paying attention to, it'll be blue color. Okay, it colors the colors for you. Again, you go to my website, you can find out more about it. I don't want to get into the calculations of it now. But again, watch it as the markets, in this case, the market is selling off. You hit a low, and what do you see? You got a bullish ratio of ratio bounds high, indicating price rejection. And so that's your sign. And people always say, well, that's great, but how do I trade it? Well, the price is being rejected down here. Where's your stop? Your stop is just below this low. You could be fairly confident that the market should start moving higher, and you don't need to risk ATR times 2 as your stop. No, your stop is just right here. It's very close. And if you're wrong, you're wrong. You just go out and look for the next trade. Okay, I mean, that's what trading is about. It's about getting past your losers quickly. This is a perfect example. Here, you're in an area where you're going sideways over 4 bars. Then in the last bar, you see a sign. You see a blue number. You got price rejection. Okay, you start trading up. You trade up. You trade outside of this area, this range that you're in. Okay, then you come back into it. Again, another sign of price rejection, and the market starts moving higher. Then, okay, so here, there's spotting price rejection, part 1. Okay, I'll show you before and after what happens here. Hopefully you can pick it up. Now you can start seeing how this market is just going sideways here. Now you got signs in this bar of price rejection with the bullish ratio here, the bullish ratio. The number, so ratio bounds high, and the market starts ticking higher. Then you start seeing some more bullish ratios here. This one's price support. This one is some price rejection. So, what you have here in this point is you have supportive buying coming into the market. And in the next bar, you have less sellers, indicating, traders are rejecting those prices, expecting, prices to keep going higher. And then what happens? These are those 2 bars there. The market rallied another 4 points right after that, over the next 5 minutes. 4 points in the S&Ps on a 1-minute chart. So the fourth thing I'll talk about is using order flow to find market-generated support and resistance levels. Again, the way most people trade support and resistance is they let the market trade there twice and say, well, that's your support level or that's your resistance level. But with order flow, you can see it the first time. You can see as we're coming down in here, you have your area of price support. You have a ratio bounds low indicating supportive buying. What happens over the next 4 bars, you test that low twice. So you already know that there's price support. The first time you hit that, you're not waiting for it to come down here, and then start moving away before you get in. No, if you know in the order flow that there's supportive buying here, you could try buying it again here for when it retests that level. So you're sitting here lying in wait with your limit order to buy, to get long. Ask yourself, are you a hunter or are you a gatherer? Hunters, are people that, analyze the market and, will sit there lying in wait for the market to come back to a level because they know the first time it traded there, there's probably support there, or there's resistance there. They're not waiting for it to come down, test it again, waiting for confirmation that sometimes never comes, right? You could have supportive buying come in, and the market just rallies straight up off of that and never test it. And if you're waiting for confirmation, you're not going to get any trades. This is a perfect example. Price support, sold off, got to this area. Price support is a ratio bounds low here, indicating price support. And if you're waiting for the price to come down here to confirm that, hey, this is your low, that you got supportive buying, you're going to miss this move. You're going to miss that. If you read the order flow, you know that, hey, there's supportive buying in here. You should be looking to get long on any sort of pullback, into that low. You're going to have a nice trade. These are on range bars and minute bars. This bar, this chart here was a 1-minute chart in crude oil. This one here is an 8-range chart in the euro currency. So, it works on minute-based charts. It works on range-based charts. This is a minute-based chart in crude oil again. And you can see how the market came up here. Sort of got the swing high. You're seeing price rejection here. Again, you test that high, and then you start coming in here. You start trading lower in this bar here. You've got not price rejection. This is resistant selling in here. So there's resistant selling in here. There's a ratio bounds low. You hit it, you come back up, test it again here, and boom, the second time, market sold off quite nicely. This was a 1-minute chart in crude, and you're talking, basically a 20-cent move over the next 5 minutes. So, on the way up, here you have supportive buying. Again, people always say, well, supportive buying, it only appears on lows. Well, for a market to continue rallying up, right, you need supportive buying to come in. You need people to hold the market up, so the sellers, so they can absorb all the selling coming in that's trying to push the market lower. So that's what supportive buying is on a move. And you don't really see that, on a bar chart. You can't. And you can only see it on a volume footprint chart. And, the best way to explain it is, most people, the retail traders, aren't familiar with how institutional traders trade. But, when an institutional trader's got several thousand lots to buy of something, they're going to try and finesse it, try and piece it in, and not move the market too much. So, but they are going to be working bids in the market to support that market. Anytime sellers come in, they're there to buy it. That's what supportive buying is. Just as resistant selling will be the opposite. So you can see on this move up, you got supportive buying with the bullish ratio bounds low right here. And then you get to the swing high, you start selling off, and you got a ratio bounds low again on the way back down. But this time it's a bearish one, and it's telling you got resistance selling. So the market hit the swing high. Sellers are starting to come in. There's a big seller up in this area in here, and it's highlighted in the order flow with the ratio. Market tests it. Boom, it sells off again. So, the third thing I'll talk about, or sorry, the fifth thing rather, is the trade setup. People always say, well, how can you trade order flow? How can you trade order flow? Is, here's a setup, right? This is a setup that I use. It's called the O2X trade, and the reason it's called the O2X trade is, think of a treasure map, and let me just get to the chart real quick. This is what the chart looks like. Okay, so it's the O is on the low, then you get a pullback within 2 ticks, and then X marks the spot. So I'll go over the rules here really quick. Again, this is something you'll have to watch on the replay to get the rules. Is what you're looking for is a daily high or daily low, or a swing high or a swing low, and a ratio bounds high, either a ratio bounds high which indicates price rejection, or a ratio bounds low which indicates price support. That's your O. You put a circle around it, for visual purposes. Then you place your limit 2 ticks off that high or low to get into the trade. If it doesn't fill you, it doesn't fill you. You don't get the trade. And your stop is just 2 ticks away from the entry. So, how does it look on the chart? It's like this. So here's your swing low. This is your low of the day, actually. But, just for visual purposes, this is your O, your circle. Your limit just goes up 2 ticks above that low, right in here in this area. And your stop is just right below the low. So that's your 3-tick stop. So you're looking for the pullback and then the move. And you can see here, it rallied up. Maybe the first time you didn't get filled. Second time it pulled back in, you definitely would have gotten filled. It traded back down to the low. And then it rallied quite nicely. Again, it rallied from the 05 area up to 15. Again, here's another example. Here's your low of the day. You got your ratio. This is a ratio balance high, indicating price rejection down here. You place the limit buy order in here, 2 ticks off this low. You place your stop just right down here. If you missed it this first time, in this case it gave you a second chance entry, but really the trade to have was the first one. I mean, it did go offer there, so it was bid offered through it, so you probably would have been filled. Again, if not, yeah, you had a second chance in here. This is your O2X. Your O, in this case, it's the low with the ratio 2. It's 2 ticks off that low, and X marks the spot, your profit target. At least 3 times greater than your risk, ideally. So hopefully by now you can see how powerful order flow analysis is. And do you think it's easy, or do you think it's difficult? Again, order flow basically has 3 things to it. It has the 3 building blocks, which is delta, which is imbalances, and point of control. And once you understand those three things, I think that you can start to understand the market. Who's in control of the market. Now, let's take a step back here. Point of control in a bar, it is important, and sometimes it's something that people don't really talk about. But if you're looking at point of control, it helps you give you the direction of the market. Higher points of controls. Generally, you're going to see higher point of controls on a move up. You're going to see lower point of controls moving down on moves lower. And oftentimes on moves up, it's going to act as your support. On moves down, it's going to act as your resistance for the next bar. So again, hopefully by now you should be convinced that hopefully order flow is something you could add to your trading. And again, it's going to make you hopefully when you're trying to decide what tools to add to your trading, you should add tools that are going to help you be consistent and take control of your trading. Again, trading is not based on luck or being special. It's about understanding the market. And once you understand what's happening in the market, you'll find the market just makes sense. Again, you don't have to spend 10,000 hours screen time trying to figure out or taking unnecessary risks. And what I mean about taking unnecessary risks is, pissing away money on, fancy trading indicators or the latest this or latest that. Because ultimately, as a trader, you have to understand what's happening in the market. And I don't know. I read people's posts online. They say, yeah, I blew out 3 accounts, 5 accounts before I became successful. I mean, gosh, you shouldn't have to keep blowing out accounts after account after account, before you get the swing of things. It's just learn what makes the markets move. So before I got started, just a little back history of me. I don't know if you're able to hear me earlier about myself. You can find out more about me on my website. But before I got into futures trading, I worked in a grocery store. When I was in college, I worked in a grocery store. When I got out of college, I was able to get a management job because I had a college degree. But the money was decent. But I had to make a decision. There's nothing wrong with working in a grocery store. I still got friends there. But is that really what I wanted to do with the rest of my life? No, it wasn't. I wanted to become a trader because I lived in the Chicago area. I saw successful traders driving around. Everyone's got a Rolex on, driving around in a nice car. That's the life I wanted. So I got a job on the CME floor, making 25 cents above minimum wage. At the time, I literally started at the bottom. But the point is, you got to break your old habits if you want to make a change. So that's why I put together this package that I call the Orderflows Trader Software Package, which is the software that you see in the charts in this presentation that has the ratios. There's actually 4 pre-programmed indicators in there. I only talked about the ratios today, but there's a few others. Again, if you go to my website, you can find out more. Or if you go to the link that I had posted earlier, the Orderflows, this link here, put in the chat. I don't know if you guys can see it, but it explains some of the other pre-programmed order flow indicators in there. And you're going to get my chart template, so your charts will look like my charts. And that's the important thing. A lot of other software, there's a big learning curve with order flow software sometimes. And if people don't know what to look at, they don't know what to add to their chart or anything like that. But again, having an order flow software is one thing. If you don't know how to use it, what's the point? And one of the reasons why I started order flows is because I wanted to teach people how to use order flow in their trading. And I provide a lot of further education. I have a course. It's called the Order Flows Trading Course. And I sell it on my website. It's $297, but I'm going to give it to you for free with this Order Flows Trader software package. And it's 20 lessons, and it's 15 hours of video instruction. So you can download the courses, put them on your tablet or your iPhone or whatever, and watch it at your leisure. You can binge watch it over a weekend. Originally, I wanted to make it like a 6-hour course, but then there's just a lot of different little things that I wanted to keep adding on, that it became 20 lessons in 15 hours. So it's quite comprehensive, but the real bonus, right, the real special thing that I want to give you access to is my inner circle. And so far, it's got over 55 videos on advanced order flow analysis, plus 6 additional indicators. These are indicators that are programmed especially for the inner circle members, people that are interested in order flow and want to take their order flow to the next level. And the videos are on order flow analysis. It's not on trend lines or anything like that. No, it's on order flow. So it's things that I only share with the inner circle. And again, I only open it up once or twice a year to outside people. But again, if you get the software package, it's included. Because I really want people to learn order flow. And really, this is the best way to learn order flows, because you have to mirror somebody that's been successful in trading with order flow. So if you were to add all this up together, right, the Order Flows Trader software by itself is normally $900, $899. The training course is normally $297. The Inner Circle, which I normally sell for $997, when I do make it available, that's already about $2,000, right, $2,193. So put it in perspective. What can you spend? I think you lost the slide here, but sorry here, the slides got mixed up. But it's just a one-time payment, $1,250. There's no other payments. As long as you have a NinjaTrader license, actually run on the free version. I shouldn't say that, but because they want you to buy the paid version. But there are people that do use it on the free version, and ultimately I know that they have upgraded to the paid version. And put it in perspective, what can you spend that money on? You can buy the new iPhone X. I just read recently that the iPhone X is actually going to be phased out. We're going to stick with the iPhone because they're going to release a new iPhone again this year. So every year they got another iPhone. But that's, you can spend your money on that, right? And in a year or two you can get a new iPhone, but you're not going to know how to trade. You're not going to understand order flow. So you could get the course, you could get the Inner Circle, you could get the trading software. If you just act now, you just got to ask yourself, what have you to lose, rather than a little bit of time and money. I don't say you're going to lose money, but what I mean is, money comes, money goes. Most people have jobs, and in a week or two, they're going to get paid, they're going to get money again, and they're going to spend it on something else. Why don't you invest in yourself, put the money into something that you could learn, a skill. Trading is a skill that can benefit you, can benefit your family, that maybe it can make a positive effect on your life. So all you do is you go to orderflows.com/all-in, and it takes you to this web page. You just scroll down, go to the page that says I'm all in, go all in. Right? It takes you to PayPal. I don't get your credit card information. I don't want that information. And you just click OK and go from there. So again, why should you join Order Flows? Is because you see the power of order flow analysis and how it can change your trading, and you want to understand what's happening in the markets, and you're excited to find new low-risk trading opportunities. You want a life of freedom and fulfillment, basically. Now, again, I said that you could get the book that I wrote. You got it. You have to give your email address. So you're going to be on the list. So I will email you in the future. If anything, any other webinars come up, go to orderflows.com/book.html. And you can find out, you can download the book, and you'll be on my list. So when there is additional, webinars coming out, I'll probably have to re-record this one myself and post it up on the YouTube channel. But again, if you got questions, email me, Mike at Orderflows. I did see a couple questions. what was it? It was Russell. I'll look again for your email, but and Nestor, I will check on your machine ID. So again, thanks everyone. Merlin. Okay, I'll check again, Merlin. Sometimes, I get so much spam email that sometimes you got to watch what you write in your header. Sometimes that's your title. It just sometimes the stuff just gets overlooked by myself or my assistant, or just goes into my spam folder. But I'll look for that. Um, okay. So again, I apologize for the technical difficulties, and again, I don't want to keep you guys on here much longer in case it goes down again. But again, any questions? I think it's best to answer. Send me your questions. I'm going to try to go through this webinar again and record it as well, and then post it on my YouTube channel. But I know NinjaTrader will also record it and put it up on their channel. So again, I appreciate everyone's patience. And Jared, I'm going to throw it back to you.
All right. Fantastic. So thanks everyone for hanging with us through those AV issues. We apologize there. We will be editing the video to take those out. So if you registered, and you will receive a copy of this, a recording of this presentation. I suggest to anyone that has questions that did not get answered, we didn't overlook you. We just ran short on time because of the technical issues. So please take down Mike's information, send him an email. Like Abe just put in his phone number. Abe, I think the best thing you could do is just send an email over to Mike. I'll make sure that Mike gets the chat transcript from this so he can address any issues. But I do, on behalf of NinjaTrader, I do want to give a special thank you to Mike for his presentation today. Regardless of the interruptions, we do appreciate you coming in. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you do find some value in these events, we'll hope that you attend them again on a regular basis. Just as an aside, we will be reaching out to Tom Novia to address these audio issues. Again, we want to remind everyone the information provided in this presentation was that of orderflows.com and not of NinjaTrader. All the information was for educational purposes and should not be construed as trading advice. We appreciate the time you spent with us today. Please enjoy the rest of your day. We hope to see you again in future webinars. Happy trading from all of us here at NinjaTrader.